All right, welcome back to our weekly watch list build. And we've got some movement here that we weren't expecting from last week, and then we kind of realized that pretty much everything we called out held its own, and now we're beginning to see this swing take off from that. But we're a little skeptical because it's been a bit of a news a news affected or news movable few events that have happened here and kind of took us out of our context a little bit, but we're still kind of holding on. So we're going to do more of a review of last week and then add a few other things to watch going forward into next week, and just to kind of follow up on what we were talking about last week and then moving on. Start with QQQ, man. This has been some volatility, so I kind of fell out of love with SPY and ran into QQQ mainly because it's smoother. It tends to float the chop a little better, and it gives you a little bit better setups for swing trades and scalps. And I like to use it to reference the NQ when we're scalping futures. I'll draw on QQQ because it kind of smooths out that action too. And I've had some pretty good runs with it this week so far. How are you doing over there?
Yeah, I mean, I like Qs better than SPY right here, primarily because you've got the 200-day as a nice reference point. I think if you are bullish, you want to see it break yesterday's high for 49. Not too far, but I would be extremely cautious here with everything. Something happened. I guess it was 2 nights ago. I was reading the news yesterday morning, coming out of Japan, which is where a lot of this turbulence is coming from. And the central bank was saying, hey, we want to raise rates, but financial markets are too volatile and we're not going to. And the market was rallying off of that yesterday, which made zero sense to me. And then you saw the reversal. But I think what we're seeing these up days that look like everything you'd want to see if you were a bull, and then they're being followed by down days that are just but ugly. So I'd be real careful here. I mean, yeah, you could go along the Qs. 200-day is a nice stop. Um, but if it were me, and we bought the dip at the close yesterday, and I'll probably be selling, assuming this holds up today, I'll probably be selling into this rally and come into tomorrow pretty light.
It's kind of how we're looking at it today. And I'm gonna cruise into yesterday first, and then we'll go back to today. Yeah, we started looking like we were going to be bullish, and of course that liquidity got grabbed and sold to us, retail people. But those of us in the know knew better. We knew exactly where the liquidity zone was, and we knew if it should break, we were likely to trend down, and we sure did. And we hit every inflection point of pivot between here and the floor, where we ended up continuing bearish into the after hours, and then we finally had that bounce when we started to see the rest of the world wake up and grab that liquidity. So yeah, it's been interesting to see this just kind of float into a range and hold there. And from the surface, if you look at the previous trend, it just looks like another bull flag. But are we going to get a repeat of this? That flag that kind of began forming on the 24th there, 25th there, and then ended up breaking range on the open of the 31st and running high for a quick liquidity grab, almost to regression or reversion, and then it failed and just went quad duking down. I borrowed that word from someone we know, and now we're set up for another one. So we got to wonder: are we going to get a quick liquidity grab and run for a reversion target, which is a pivot here currently on Q about 451.60? We could even see it reach all the way to this liquidity zone real quick with another one of these reject off of here at 457, 458 in that range. That's possible too. But in the meantime, we're hanging right at the top of a measured move for the day, right back under the 86.6 fib line of yesterday's high just before we broke over. So we're kind of kind of hugging in an area where we could start selling into this if it starts to break over. And then this morning I was walking through members where we were riding this bull trend up and picking off all the pivots and pullbacks within. You can see I got a bunch of dope on my chart here. Effectively, we tend to notice these things when we see these descending broadening patterns. We knew it was going to give half the news bar back from the jobs. Yes, we took that long, ran up. We went A to B in a liquidity zone, and we kind of stopped a little bit above it, and about 3/4 of a block measure moved from this base to here. And now we're just setting up to where if it fails to break out of here, yep, it'll go right back and hit reversion target after reversion target until it starts to trend and get soaked up. But there's still a chance where if we hold this liquidity zone high here, this zone B I like to call it, this is A at the beginning, B at the top. If we hold that and we break out of this box, the possibility of running that failed bear flag scenario where it runs up, it gives it the pop, what I like to call the pop and drop bear flag. They get a quick pop of liquidity. It gets sold right away and it rallies down. It's kind of a common fact that those do get looked at by everybody and their mother, and when they're realized, they move quick. So we're kind of waiting for that shoe to drop. We'll see if we either break higher or we break down for a midday swing, and it may not even do anything. It may just hold this range through the rest of the day and then start to move tomorrow. That's possible too. We'll have to see what the world brings us overnight, so to speak. So definitely a time of caution. And now we're in a place where swing trades are going to be a little bit harder to spot, and follow through is going to be kind of statistically a little lower probability than we would like. So it's not the best market for swing traders. This is a day trader's dream, but swing traders are going to get beat up a bit in this. That's why we're here doing this. So we were looking at reflecting on a few of the things we were trading last week, and we're also going to look at a couple more and a couple things to pay attention to in this coming week. And I know last week I think you had a few things that worked out and held their own. And then let me get the menu up here so I can get into that. And again, if you guys want to shoot us a ticker or shoot us a comment, ask us about something, feel free. We're live. We'll pay attention to the chat eventually. I got 3 monitors, so I got to flash back and forth to it, but I'll do what I can. Looking at Matthew's picks from last week, we had LRCX, FCX, and Alcoa AA. And I'll start with LCRX. Let me get back into the daily.
LRCX.
LRCX. My Lexdiskia is poking through. So we recognized the previous trend of a nice measured move block. We knew there was a possibility of revisiting, a reversion trade of this trend here, and we did. And that was into that sell-off yesterday. But it didn't get beat up as badly as everything else in the market. It held its own. And then now we're looking for a similar pattern to what we see on Q. It's got that look where it can either be a bear flag with a pop and drop, or it can reverse as a double bottom, and although the chops in the middle is kind of crappy, and come up to a reversion trade right up here to about 823, 824, and possibly extend into the range here about 827. If it rejects
823.05 is the 10-day, by the way.
So great minds, even though I don't use some of those moving averages.
I know you don't. That's why I pointed it out.
But those reversion lines, they give you the same result within reason, within 10 cents at this point, which is pretty good. Great minds tend to think alike, and everybody's got a different way of thinking. And I love that, because we can bounce off of each other, and we become successful when we do bounce off of each other quite a bit. And I got pretty much the same number just looking at this reversion. So I look at the high and low and I split it. There's your line. And that is the target for this to follow through. If it breaks resistance here, we're looking for a move up there. So it didn't exactly get bullish yet, but we were putting this together as a watch list. We're watching these to see if the setup completes and then gives us a breakout. And then we got all the dope on the chart to know where our targets are when it does. That's the whole point of the show. Moving into the next one, FCX here. And this one's same thing. Nice little double bottom. Our reversion's a little higher for range on this one, particularly about 43.37 is where I have the pivot line, and that's probably pretty close to that 10-day.
I actually ended up buying the dip on this one yesterday at the close. So,
Nice.
I mean, so far, so good. I would like to see it break yesterday's high, though. Where are we? 41.65. All right, we're not too far.
And the daily actually has a pretty good shot of following through into a full reversion. I'm going to draw a liquidity zone right up here. Anytime you see a wick on a 2-hour candle, just do this. It will serve you well. It's a liquidity zone. You can run supply, demand, and all that happy stuff, but with equities, I like liquidity zones, and they work great on indexes too. It's just a mean to a target. But if you look here, I mean, that's exactly about half of the previous daily measured move here. We got a primary accumulation, secondary. It hit an angular down here. I've got a lot of really old dope on this thing. I've traded the crap out of it in the past, and I just
Yeah,
leave it.
no, this is one of my favorites to trade. There are a few names that we put on as names that we're constantly in and out of, and this is one of them.
It's where we see quality setups, and they have a high probability of following through, and that's the things we love to trade. So, and FCX is definitely one of mine too. Used to be American Steel. I used to love the setups on that one. Although that tended to be more volatile than FCX. It tended to kind of move with the same kind of treatment. It had good setups. Not so much anymore. X is a little different. So I strayed away from it. And you can change the equities that are in your favorites list. You know, if you don't like them anymore, you don't have to keep liking them. You're not married to them. You can move on. You can play the field. Don't let my wife hear that. But looking for reversion, yeah, we're splitting right into this liquidity zone. We could see it extend up to 45.70 or maybe even 46.40, somewhere in that neighborhood is respectable, not expected. And we like to react instead of predict, so that's kind of the way to go. And then the key pivot here for the previous range is right back to about that 43.37, 43.40 area. So respectively, good setups are still holding their own on this thing. We just need to wait for follow through on this as a reversal. If this ends up being a bear flag, we can certainly change our minds, and you should too. Just because we say we like the setup doesn't mean you have to go and trade it. So please don't take this as financial advice. Never. We're just
No.
bringing trade ideas, not financial advice. There's a difference. Last but not least, we got Alcoa was your other pick here.
Yeah, I also bought this on the dip yesterday at the close as well, and same deal. I'd want to see it break above yesterday's high, and it's getting there.
It's creeping its way through it, and I like that one. That was a good dip buy. And as I was saying to our members yesterday, I'm like, the BTFD crowd is starting to get rowdy. We're going to see a lot of dip buys kind of occurring in this general volatility that we're seeing flow into the market now, and I think there's a good chance of. I like to mark these little subzones in gray. If we break this zone, we'll start heading for this LZ up here. I think there's a good shot of that breaking out. So far, the trend is strong. Reversal was really just signaled by more or less a doji, and the daily chart was a hammer. So break that 8 period, and we'll swing on to the 20, and it'll probably meet right at the top of the zone for our trade setup. It can extend a little higher and go for reverting back to previous accumulation here. So if things start looking good for metals, they'll start looking good for some of these guys on margin, basically. Cost of materials goes up, cost of produced goods goes up. We know the drill. Speaking of materials, we were looking at GDX. Little gold miners. No, not GDX.
Yeah, GDX. That's the gold miners.
For some reason, my
Yeah, we flipped from short to long yesterday also on the close. So far so good, but I'd really love to see this break through the 50-day. Let's see, high 35.54. Yeah, the high is 35.54. 50-day is 35.62. You know, it does. I mean, right now it looks more like a short to me.
I mean, it's more or less
And if the
reverted
market,
yesterday.
yeah,
Yeah.
if the market closed right now, I would be getting rid of my long and going back short. But that's a lot's going to happen between now and the close.
Agreed. And I did see a very rapid rally in platinum futures this morning. We were watching them. And generally, when that happens, we start looking at miners because it tends to be led by platinum lately. So we noticed quite the rally off that floor. There were just a whole bunch of buyers came right into the market at pretty close to yesterday's low. So the BTFD crew that missed yesterday's drop bought it today and ran right for a reversion right to the pivot about the middle of that range. So this is a great idea to take profit on that right there and maybe wait and see what this does. It can break and continue running to that high, but usually halfbacks are profoundly more profitable and more probable than anything else in the market. You get that retracement or reversion trade, whatever you want to call it, very typically after a big move, and there it is. We see the same thing with earnings. You get a big earnings candle, it almost always gives half back, and then it'll accumulate for a while and either break north or break south. It's just kind of the name of the game. Reversion trades are great, and it has such a high probability that swing traders do well with them. And this was a good overnight swing right here. So, yeah, I think it's a good time to take profit on that. I got time to maybe run through my list, and we got a couple more to add. And then,
There you go. What are you looking at?
so from last week, we had Shake Shack. I was looking at the range trade on this thing, given half back of the earnings candle, and it gave a little more than half back, but it gave half the trend back of total. Rejected off that pivot like we were thinking, came back, found half, and gave us continuation so far. Yesterday's dip here was a great opportunity. And hit
Eric,
this.
do you have the 50-day on your chart? Because it bounced exactly on the 50-day.
I don't have a 50-day, but I can add one. Why not? Let me go into my MA here. Whoops.
Yeah, that down day from, what would that be? What's today? Thursday? So that'd be Monday. Bounced exactly at the 50-day.
Oh, yeah. Right on it. Wick and all. Very good deal. So moving averages do matter.
I mean, that's why I use them.
And like I said, everybody has their own way of looking at stuff, and great minds end up thinking alike anyway. I've got a very odd way of looking at price action, and it works for me. It doesn't work for everybody. So I like to tell people, take what works for you and build it.
Right, and that's the cool thing about something like this is there's no one right answer. There's a bunch of wrong ones, but there's no one right answer, and you've got to take the answer that works the best for you. Don't take my way, don't take your way.
Exactly.
Figure out what works best for you.
And we tell all the students in Bullish Bears that as well, that you can take bits and pieces from all the different moderators who do all of our live streaming and instruction and build something that works for you specifically. It's going to be the individual that takes control of their own portfolio, and you have to have your own individual style, and you'll build it bits and pieces of everything else you can learn from anybody and everybody, and find what works for you. Eventually you'll get to that point where something will work for you and you just stick with it. That's what I've been doing, and then I develop
which is what I do, by the way. I take bits and pieces from a lot of different places, because what that does is it gives me real diversification.
Absolutely.
Diversification is not value stocks and growth stocks or US and international. Diversification is different methodologies which produce different return streams.
And me, I mean, coming from being a mechanic for a better part of 20 years in the automotive industry and various applications of it, even some aviation ground equipment service, which I've done for a while, I get to realize that I can treat trading exactly like that. I have a box full of tools, and I can just pick up the tool for the job at the time, use it, and then put it away, go to the next job. And it's the same scenario. I've got many different methods I can use for analysis that all kind of function the same, but a little bit different, and they're applied to various conditions of market that I can utilize them in. And this is kind of one of them. Shake Shack worked out really good. And the other part of this scenario is we have a beautiful measured move setup, and we're looking for a break above this high. This 105.10 here is a little under that 86.6 pivot or 86.6 fib of the previous high, but it's also right under a liquidity area. I'm expecting a little bit of selling to happen right around 105.10, And if you look back here on the weekly, you can see there was some strong wicks in the previous trend here. It kind of blocked that area right up into that next zone. A 1.5 move would take us to like 122.20, and a 2-for-1 move would take us all the way up to like 136 and change, back to that, visit that previous high there. So good moves on this one. Good earnings call, and of course, gave back half, bounced off that 20 or 50 day, and just absolutely gave us the goods on this one. Good swing trade setup. A few others to mention real quick, and then we got to get to a couple new ones and make sure we don't go too much into overtime on today. So we got a lot to talk about, always. NVIDIA, that's the elephant in the room. What's your take on that one?
Let's see. It's been all over the place today. Yeah. To me, 100 is a real important level, and it's above that right now. Yesterday's low, if it can't keep 100 at 98.69, is also important. So right now, I would be bullish on NVIDIA. In our ETFs, and it's early, I mean, we're seeing flows. We saw massive outflows yesterday out of our inverse NVIDIA. We've seen small inflows today onto the long, but again, way early. So I don't know where the flows are going to be, but so far the people who sold the inverse yesterday, good trade.
And I've noticed those are great vehicles for trading NVIDIA, by the way, and other individual equities that move with a lot of volume and a lot of force. I'm noticing that the bid ask is starting to tighten up on the options chain the way I like it, and I'm starting to see it flow in. Those will definitely be some awesome wheels for me. Someone asked me to ask you, what is the fee percentage on those vehicles typically like?
I think we're 1.05. Hold on.
Which is phenomenal, by the way, because what do they do typically, like three?
1.05.
So typically, other funds are like 3, I thought, somewhere in that neighborhood.
No, I mean, different ones are different. Our biggest competitor, whose symbol I will not mention, is 1.15.
Okay.
So we're 10 basis points cheaper than them.
There you go. The idea is that eventually because they're leveraged ETFs, they become a long-term diminishing asset. It's just kind of the nature of them. But what I'm getting at is, if you are a seller of premium, pushing premium is one of my old handles. I had this shirt made. Thank you, Andy, from Mighty Soldiers Trading there. I'll throw his logo on. Good friend of mine. And it's kind of a proven fact that you find any leveraged ETF out there, that if they're popular enough and you get a really nice flow of options traders on it, and you start being a premium pusher, you start selling premium in a wheel trade fashion, and then you get both the inverse bull and the inverse bearish ETFs to boot, which we have. They are income machines when the options chain starts to flow really nicely. And I'll tell you, man, I'm averaging currently almost 20%, almost 20% a month on trading TNA average since the beginning of the year, which is phenomenal. That's just one. I've gotten into a little bit with BTCL and BTCZ, and I haven't quite got the options down on that yet because they're pretty wide still. They got to get some more flow. But when they start ending up like NVDX and NVDL, or what was the short one?
NVDQ.
Q, that's right.
You're talking about Bitcoin?
I was going into Bitcoin, but I'm comparing to the NVIDIA ones.
Oh, yeah. BTCZ.
Got it. So
now, on the other hand, in our Bitcoin yesterday, we had money coming out of the long and money coming into the short. So not such a good trade.
I got my I sold some cash secured puts on BTCZ and got filled at an average price of like $19.10, and then when I was assigned. minus premium, and then it just tore down. Bitcoin tore down, so I sold a put at the bottom of that bottom of the long BTC ETF, and didn't get filled on that one, so I'm probably gonna end up keeping the premium on that one. But if it does fill, great. The idea is I can go and trade both of them, and it becomes a net neutral outlay, although it does diminish over time, and they both produce premium. So if I combine the two as one unit and continue to sell premium on them, I'm looking for something that'll beat TNA. So if I'm better than 20% a month on those, as time goes on and I'm working with it, it's going to take a while for the options flow to come into it and do the things that I like it to do for my wheel trade strategy. But my idea is if it beats 20% a month, dude, I'm going to absolutely love it, and I'll just stick to it. I could just live off of trading those is what I'm getting at. So,
That's nice.
if you can go both long and short, you don't care what the equity does. Eventually, you'll get a split or whatever it happens, just roll with it. But if you're generating income on premium, man, you can really, really kill the market. And that's one of the things we do teach a lot about with the Bullish Bears. We teach you how to wheel trade like a boss, man. It's like trading like a market maker. You feel like $1,000,000 when you do it. It's awesome.
Speaking of making money off premium, keep an eye out for some future filings.
Oh, good. I think I'll keep an eye on that. I know there's a couple of ones you had in mind that I won't mention yet, but I got an idea that they're going to be great. if they're
So.
if they're anything like some of the previous things, like especially the Tesla one I've been killing it with, we're gonna do well. All right, a couple other things to revisit, and then we got to get going on the other stuff. Let's see here. EXAS was one of my picks from last week. Nice big old rounding bottom, met right to that reversion target. Beautiful trade. That one went very, very well. Now we're kind of floating in that range. Remember, we like to look for the reversion trade, and then we like to trade from reversion back to liquidity. That went very well. And
that one's bumping up against the 200-day.
That's the other thing I'm going to get at on that. It's right in the middle of this previous trend. It's a beautiful rounding bottom break. If it breaks that 200-day with some force now, it can go straight to the next rim line, about 62.90. If it rejects here, cool, because we'd like to see it range here a little while and give us the pullback expectation holding this 94.75 pivot. If it does that and then starts to walk into a beautiful bull trend, this thing will be an absolute dominating force in the market, I think, later on. And looking way left, get the weekly chart out. Market structure never really gave it much accumulation and then gave it the half back already, and it's done it repeatedly. So if we're looking for this to be a repeat of this scenario here, so to speak, that's where that trend can just rip it past $100. And I'm going to stick a pivot up there just to kind of make a marker today. Let's call this, if I were to be an accredited analyst of any kind. I'm a self-proclaimed analyst at this point. I like to make those lines in purple.
We can go with that.
Give it about 6 months to a year, and eventually we should see that $100 play in there. If this works out, if this gives us the accumulation and breaks into a bull trend, this thing could give us some really nice moves. If it doesn't, well, it'll just fade and continue the market structure thing until it accumulates enough to get a couple short squeeze plays. But recently we've seen some pretty good outlooks on this thing for long-term stuff, so we're looking for good swings out of this. I'll make that my market maker or my market analyst target right there, $100. And then in between then and now, the short term, of course, you've got pivots, about 72, 73, some change. Just look for the high zones. You'll see them. All right. Enough said about that one. Chipotle, another decent swing trade we had from last week. We were looking for the this to be a reversal of like a V-bottom sort and go back to reversion. Didn't get that, but we got one hell of a dip buy yesterday. And
I like this one. This is an undercut and rally at the 200-day.
And it went right into that liquidity zone from there. And I think we're still looking for a little more bullish movement to get back to this target here. The other day, though, was even greater. When we looked at this, let me see here. What date was that? The 5th? what was last Thursday? I can't even remember. So it'd be the first. Yeah, we were looking at it here for holding this liquidity zone, and we're thinking if it held, cool, it can go back. We're getting a second chance here in spite of this looking like a nasty M top here with a low low. It's not. Those are typically reversals at the top of a trend. This is not what we're seeing here. We're seeing some range. And if it holds this and breaks out bullish, cool, we're good to go. But if it rejects here at this high and starts to run back into this range, we could just walk away from that. So in the meantime, be a little cautious with this one because we've noticed these market conditions have been a bit volatile. There's been a lot of news risk in the marketplace these days, and we're kind of floating on consumer things like fast food and restaurant chains get hit pretty hard with that type of stuff. So be cautious here. But the swing trade setup is still kind of on to shoot for this zone. We just need to wait and see what this does in the next couple of days. That does it for our follow-up. Now let's look at a couple other things. LLY, I guess we can start with. Reversion trade's done twice. The earnings bar gave us that push right for a full reversion. That was an easy mark for all of the LLY traders. Back to half here. If it holds here, cool. We could see this thing accumulate and run back to the long side. And then we looked at NVO, which we both agreed we like better. And that's kind of a sympathy play on this one. Let me get NVO up here. I like this better because it's got that descending broadening pattern here, or some call that the megaphone. And typically those tend to break bullish. We're right on the regression line for it for today on a reversion. And we're looking to hold our own and maybe finish a move back to the angular here, maybe push to about 128.50 or so. If we break out of that, of course, a pivot return to about 131.50, 131.60 is possible. And in the long term, if this ends up being a nice reversal and it is off that 200-day, we could see this give us a nice reversion to other zones above.
So in the short term, so I own Lilly, I don't own NVO. In the short term, if I were trading gap ups, and I'm not because I already owned it, I would be looking at today's low, 825.24, and not exactly there, maybe 824.99, something like that as a stop. In the longer term, understand what we're dealing with here. These are both weight loss drug companies. Who knows which one's got the better drug? Kramer says Lilly does, which means NVO probably does. But looking at kind of massive long-term macro drivers, this has the potential to be massive because we've got a massive obesity epidemic. And if all you need to do is take a shot and you're not fat anymore, people are going to do that.
Of course.
Why I'm not in this as a long-term trade is because I believe these drugs are going to end up having horrific side effects. And I think there's too much risk, but I may be totally wrong here. And if someone says, hey, I want to buy both these names and hold on to them long term, I wouldn't go against that because this has the potential to be, a game changer along the lines of what AI does. I'm just concerned about the risk. And I think, you can control your weight with diet pretty easily. Why take an injection every week for the rest of your life?
I agree. And it becomes a little bit easy for us active people to say that, but it's true. If you have the discipline to just stay active. I'm on a seafood diet myself. I'm blessed with that metabolism, I guess, but I see food, I eat it. It's an old joke. Anyway,
I know the joke. Sorry.
I'm not one who would refer to drugs to do anything that I don't need, and I agree with you on the risk there. It's definitely got that risk. It is something where the treatment is more profitable than the cure, so to speak. And everybody kind of looks for that easy button type of thing. They love easy. It's not necessarily calling America lazy, but it is. It just, you can't deny that. Um, but when you get down to trading, and yes, there is risk here. If this falls out, sure, we've got some key support areas to smoke here. But the short term and medium term trades, the setups are good. It's got good volatility. It's got good swings, and that's what we identify as being a decent trade setup. It's got potential to run back to this angular one last time in this channel before we make a decision. So swing traders, scalp it. Make a good overnight move or two, and be good with it. But yeah, you're right. The risk is definitely high. For the buy and hold type, look left. That thing has been a monster for decades, of course. But right here, we're seeing some volatility, and we look for volatility as traders. So, long-term holders, be a little advised that this is going to have a lot of risk to it for long term. But for us swing traders, scalp it. It's there. It's got plenty of moves. It makes great setups, and it's easy to trade. I think that's kind of it on my end. Did you have any new tickers to add? I had two. Kind of weak for this week.
I mean, if it can break above the 200-day, which it's just inching above by 20 cents, is Microsoft. Yeah, but again, we could wake up tomorrow and see the market down 1.5%. I wouldn't be shocked. I also wouldn't be shocked if we're in the red at 4 o'clock. I mean, at this point, it's not looking like that's going to happen. So, but if it did, it's not like, oh my God, how did that happen?
Right. Wouldn't be
But
a shocker.
that's the only thing that kind of sticks out to me. Pops above the 200-day tight stop, and if this market does continue to come back, Microsoft's got a lot of ground to make up. But
Oh, for sure.
besides that, I'm not too enthused on the long side. And like I said, my models right now, again, if the market closed right this moment, I would be selling and going short a whole bunch of stuff.
Agreed. And there's the seasonality is not making as much sense for everybody this year because it is an election year. It's going to have a lot of news risk in it. Things are going to just be thrown back and forth, and you get that volatility that us traders do love, but stability, it's really hard to call out swing trades like this time of year in an election year. And I agree with you. It's going to be some risk. We wouldn't be shocked if we see this thing just get its face ripped off tomorrow, and that takes the market with it, or vice versa. Market takes it with it. But in the meantime, we get some reversion trades and stuff like that. Here, I've noticed we've got the left half of a diamond, and we're compressing a bit. I love diamond patterns. Now, I'm just going to take a moment to draw the angular resistance side of it and support side of it. I'm going to eyeball this here. Close enough. So we're right at the angular resistance here today. That is right where that 200-day moving average is. I'm on the 2-hour chart. If we get a breakout here, the easy target is right up here, the liquidity, and that's just the top of our range bar here. Half would be going to about the 86.6 fib of this guy here, so maybe the top of this bar would be our first target. So for day traders and swing traders who are going to try and go with Microsoft overnight, there's an easy set of targets for you right there. In the meantime, these diamonds, they're not reversals, they're not continuation patterns necessarily, but they're usually preceding volatility. And next week we could see some serious volatility. We got things in the global view that are kind of popping off, Middle East stuff, Russia versus Zelensky stuff, whatever. We got a lot of stuff kind of spinning around. There's a lot of stuff heating up, and plus we've got the political stuff going on in our own country. So it's like, yeah, there's going to be some volatility expected, and diamond patterns usually always precede that. Here we are on the compression side, and we're either going to break out violently to the upside or violently to the downside, very typically. I'm going to zoom out on Microsoft, for instance, here. Go into a weekly chart. There's a broadening pattern here on the weekly that I also wanted to note. And we touched the bottom. And I'm going to probably presume I like to draw a regression line in the middle of that pattern. If we reject off of a move through this liquidity, like if we suddenly get really bullish and the market starts to run back that's about the point where I'm going to start to say, take profit and wait patiently for the next setup, because if it gets that far, we're going to certainly give half of it back pretty typically. So watch this pattern. These megaphone patterns or broadening patterns, especially at the top of a trend like this, usually will touch that and then get its face ripped off to the downside. It's just kind of classic setup, but we never know. We got to wait and see what this market's going to do to us first. I think we got time for like one more if you want to look at something.
Let's see. Yeah, I was looking at Netflix earlier. Yeah, that's interesting. That had an undercut and rally at the 10-day. Again, if this market, if today is not a head fake, that could be an interesting one to go long as well. And if I were using the 10-day as a stop, it's not too far away.
And it's got the 20 period right there too. It's almost up against it. And reversion trade takes us to a key pivot right in there. I've got so much old dope on Netflix from, if you saw my weekly chart there. Got stuff way down here. I just never deleted it, but a quick short-term reversion trade is underway. It's looking for that high, like 645.50 would be a full reversion. But in the meantime, we've got two liquidity zones to break. One, yesterday's high, right in that wick. Every time you see a wick, it's a liquidity zone. Just call it that. Take my word for it. Mark it on your chart. It'll make sense to you. And that pivot goes right through the middle of the next zone up here. But then we've got this guy that threatened to fake out right there. So this is likely to give us that fake out. If a wick stops at the top of that zone and gets rejected today, we'll be bears overnight. We can make a good swing right back to this zone right in here. I'll keep these short length because I don't think it's going to take more than a couple days to follow through this. But that's about what I'm thinking. We can always extend them later if we want. Range trade. Reject here, go here. Blow through here, go here. Pretty simple. I like Netflix though. It's a good fun trading stock.
Yeah, I mean, again, the market's got to go up.
Eventually, it does, and let's get into a monthly chart on this thing. It has been just absolutely on fire for a long time now, but it did back off the all-time high here at about that 86.6 fib level, right there where your closing bar was. And that's a lot of stinking range for a really long double top. So I hope I don't see Netflix do what Roku did way back in the day when everybody else was trying to chase it higher and I was the only guy shorting it, seemed like. Because, man, that would be some great trades if you could short something like that down to like even 430 would be psycho. So this is a time where we're expecting some volatility, and if you do like to look at a monthly chart every now and then, that's a setup I love to short. Just saying. But I'm going to wait for the short term to figure it out. I'm going to see if this gives us a couple reversion trades in the meantime for some swings to run a little higher, but I don't know that it's going to break that fib level. In fact, I'm going to mark that as red. I hope that's not a sign of the times. I hope that doesn't say we're going to, have the mother of all recessions and maybe all those Chicken Little cluckers are right about the sky falling, but,
Maybe. I don't know whether that's a negative for the market, though. That just means the Fed's going to bring interest rates down to zero, pump money into the system, and
sweet.
Crank up the money printer.
And what do us investors do at that time? We buy real estate or durable goods, whatever. We profit from failure too on the way down. So yeah, just trade the chart. I mean, you don't have to sit there and be glued to the news and get talked out of good trades, because that's what they do, whether they like to or not. The media is going to bring you like all that doom and gloom and just dash your trading abilities to bits. But if you just trade the chart doesn't lie, and the chart can give you really good clues of what to expect next. You don't want to predict, you want to react. But the best thing it does is it beats the news. The news only tells you what already happened. The chart tells you what is potentially going to happen. So we like to trade the chart. We're technical traders to the bone, and we are really good at it. We don't do what Kramer says. If you remember our previous show, we used to bash on Kramer, and we wasted so much time going through his watch list. And we find some good trades in there. We found a couple. But for the most part, it's malarkey. It's a bunch of the media telling you what to trade, and you know what? Technical analysts are gonna beat them every time, and we do.
And also, I mean, Kramer's been on a bender the past couple of days.
Oh, true.
A lot of gibberish.
What was one he said to buy that just absolutely failed miserably? I looked at it this morning and I looked away.
I mean, take your pick.
Yeah, it was last week. I want to say he said, "Dang, it's gone." But last week he said buy something. I watched it just absolutely rip a Kramer bar to the downside. Sorry, Kramer.
I mean, this morning I called him out because he tweeted something about NVIDIA moving up after Lilly announced their earnings. It's like, dude, NVIDIA moved up because of the jobless claims.
Yeah, that's the main thing. And then
Lilly earnings and NVIDIA have zero in common.
And then I went and got into a very small position on this, and I don't recommend this. This is one of my failings, and I'll admit it right here. But it's not a failing yet. Intel Corp, that earnings call, I bought a bit of that dip for a wheel trade. I sold some put options and got into a point where I sold some covered calls on it as well. Of course, the covered calls are going to expire worthless, obviously. But long term, I know that this is kind of a no stock to go long on. Looking at all the failings of management, and they just lost their edge with the innovation, and they kind of fell into what I think AMD fell into about back in 18, maybe late 17, early 18, all the way to the end of 18. They seem to play like one of those mom and pop companies that trips over a dollar to pick up a dime, and this is what the chart tells us. It's just obvious. But if it holds a range around $20 or so and starts to accumulate, and management starts to make some actual good decisions instead of having to lay off most of their staff or a bunch of their staff or whatever, and they start to, maybe start clearing the closet in their middle management teams and all those guys and the bean counters and just putting in some innovative people, I think they could pull an AMD eventually and come back from the ashes, so to speak. And AMD is by far an example of absolutely what that can do. Let me look back at AMD here. And, you look at the scenario. I mean, I remember trading AMD when it was like trapped in a range from like $9 to $11 forever, it seemed, back in the day here.
And then 100 was a level it couldn't break.
Yep, and it just absolutely ripped faces off. It just it eluded a lot of people, myself included. I
actually like it here if it can break above the 10-day.
And I can see Intel eventually being in this position to where they eventually, fix some things with management, get the company into.
You got to be careful. I mean, Intel's one of those names like Snapchat that just every once in a while it's just gonna rip your head off. You just got to be careful with that one.
Yes, sir. It's almost like the tech widowmaker. You call it that.
I mean, you got to have balls of steel to be holding Intel through earnings.
Yeah, I didn't hold it through earnings. I just bought a little bit of the dip, and I'm interested in making premium on that anyway. So over time, I'll earn enough premium selling options on this thing to where I won't care if it goes to $5 a share. It'll just be right with my cost basis. But look at the monthly on this thing. I mean, it was a beast while AMD wasn't, and then it flipped around and became kind of the go-to, and now it's back to levels where it's respectably affordable. So, if it dips down here and revisits these previous lows in this big old bowl, so to speak here, look at it this way. Market structure did its thing, and then it eventually became great company, innovative. Market structure did its thing again. It's just a cycle. It's rotation, and you just trade it. Over the long run, if you look at this, it's one big giant cup, and there's your handle, and that's why I'm looking at it right now. If this handle is going to give us some great range trades, well, I'm going to trade range on it. If not, I'm going to sell premium until it does. I got years with this. I don't care, you know. So I'm all about it, and I'm actually about to sell a covered call on it again. But it's just for me, it's a generator of premium. I just trade it as an
Maybe we'll
income.
do an Intel covered call ETF. That
That
could be interesting.
that could be, and if it does both sides though, I gotta wonder is
You gonna do $20 million worth in your PA?
if I was managing it, maybe. I mean, if it's my own, I'm not going to put that much weight into it.
Right.
I'm like
Maybe I won't do it.
I'm like at about 1% of my portfolio balance in it, and just barely 1%. So I mean, it's just a swing to generate income. But I could see instead of building like a covered call ETF, I gotta wonder if it's possible to build a wheel trade ETF that would be worth doing, because
it is. It's possible to build it. So I talked to a group of guys who did. Gave them some advice. They didn't take all of it, but they took some of it and they launched. It's WEEL. I know nothing about it, but it is there.
some fairly low volume, but all ETFs start out that way. Let me throw the old HA candles at it and see if we can spot some things. What does it trade though?
All right, it's got almost 5 million in it.
It would be phenomenal to have a wheel trade ETF that has feasible options chain to where you could wheel trade the wheel trade ETF. I mean,
it's got a bunch of sector and style ETFs. Then it looks like it's selling calls and selling puts on them.
Okay.
There you go.
Well, there it is. That's just a wheel trading ETF. The strategy I trade on wheel trade though is it's a hybrid of the traditional wheel trade. So I'm actively selling to open and then buying to close those options day to day or sometimes week to week, and I'm taking advantage of the swing in price on them. So like I can go and trade the same contract 2 or 3 times and collect all the premium a week or two before expiration and roll out to the next one. So I mean, instead of just sitting until the end of the month selling options, I'll rotate in and out of them and just compound my position and compound my cost basis down. So I'm very active in those, and it's traditionally a fairly passive.
I think something like a wheel trade is probably better off done the way you're doing it than an ETF. I think covered calls works in an ETF because the average investor may want to pursue that strategy and doesn't have the expertise.
Right.
I think the average investor has no idea what a wheel trade is, doesn't want to pursue the wheel trade. That's for sophisticated guys. And if you're sophisticated, just do it yourself. Same thing with covered calls. I'd never buy a covered call ETF because I do the covered call myself.
Right.
But you've got a whole bunch of investors out there like, I want covered calls and I don't know how to do it.
So it'd almost be better to, like, if you were going to trade it as a fund, you couldn't really do it with an ETF because you can't rotate it fast enough to go and swing the strike, so to speak, the way I do. But I gotta wonder if there's a way to do it with a private equity fund, and just run it that way. That'd be kind of cool. I know some private equity funds will do something similar, but when you're taking that kind of size to it, you got to have some serious options volume to do, and that's why I was kind of looking at back a couple years ago, a few private equity fund managers found themselves joining the Bullish Bears to learn how to run that hybrid wheel trade that I do, and they didn't necessarily see the the risk being worth it on equities directly, but when it came to houses like TQQQ or TNA, some of those slightly leveraged big box ETFs that go and do like the small caps or mid caps or what have you, were so much more fruitful to run the hybrid wheel trade strategy on that it just it was an absolute home run with them. So once they learn how to do it, they've reported back to me since then, and they're like, "Wow, man, this is like all I need to do now. I don't even need to scalp futures." So I'm like, "Cool." So I can say I taught a couple fund managers how to run the hybrid wheel trade strategy in a way that's very fruitful. And like I said, I've been knocking just short of 20% a month on TNA, just kind of passively. I'm not even very actively. I'm semi-passively trading the wheel trade strategy on TNA and killing it. I don't know many people who can run 20% a month selling options. It's very rare. So kudos to me.
There you go. If you were sitting here, I'd pat you on the back.
Appreciate it, man. That's just another great minds acknowledging each other. We thrive together, and we can bounce things off of each other and make some really good decisions and make some really killer trades, and that's kind of what we both do here. So if you follow us, like us, subscribe us, of course, the whole cliche thing, but tell your friends, because we've got some great ideas. We come out with some really good analysis, and more often than not, we're hitting it out of the park. We've run over Kramer, and we can't do like almost a year of like 94% average accuracy on our call outs, just picking off of Kramer's list without going into what we're doing now and just showing you what we're looking at, the slam dunk trade setups that we look at and we do very well with. So that's the whole shebang right there. So stick with us. We'll tell you how. Stick with us if you want to live. Yeah, that's what we'll say. If you want to live, come with me. Anyway, I think that's kind of a wrap. We've done very well and recapped our stuff from last week. Got a couple new ones to watch. And again, this is not the best market conditions for swing traders at the moment, but we will come up with some really good ones very soon, I think, once we get through some of this volatility in the short term. So stick with us, and next week we will probably have some good fruit for you. Thanks again, guys. Have a wonderful afternoon. And again, just be a little nimble and cautious in this market condition if you're a swing trader. It's going to be a good time to be patient, and good things happen.